fact versus fiction, hope versus reality. Is the 15-year high in U.S. consumer confidence a con game? So, for those of you who were not aware, last week it was released. The University of Michigan Consumer Sentiment Index reached a 15-year high. Expectations rise at the fastest rate in more than 7 years. So let me continue reading here. That's the biggest jump in expectations since 2011. And what they're saying is, this is a MarketWatch article I'm quoting from, quote, generally speaking, we've seen weaker hard data, which means actual retail sales numbers for April, so core retail sales and industrial production, but sentiment on survey-based data for May has come in strong for factories, housing, and the consumer. This suggests underlying growth is reasonably healthy, end quote, said Neil Dutta, head of economics at Renaissance Macro Research. So this sounds like, to me, this is hopium above reality. The reality is, and we know this from Danielle DiMartino Booth and Anecdotal Evidence, that credit card debt in the United States has exploded the last 12 months. I believe now it's an $850 billion or $900 billion increase in credit card debt. On top of this, anecdotally, I just see tons and tons of evidence that the U.S. consumer, which if you're not familiar, makes up around 69% consumer spending does of the U.S.'s GDP, that the U.S. consumer, especially in an area like the Washington, D.C. metro area, which has 3 of the 5 largest average median family incomes, that the consumer is not doing well. So there are malls that are busy parking lot traffic. However, I do not see when I go to malls, and I don't go to malls that often, but the parking lot may be full, but I don't see people buying things. I see people walking around. I see people hanging out. I see people maybe eating something, 1 or 2 things, and maybe they bought 1 or 2 tiny things. I don't see tons of people with lots of shopping bags. And the real data, the real retail sales data is reflecting reality versus the hopium of consumer sentiment. So when President Trump says that this is the greatest economy ever, there's really nothing to back it up. Okay, whether it's the labor participation rate, whether it's the job growth that we do have is only at most in many industries around 4%. Some industries, maybe it's a little bit higher than that, 5 to 7%. You're lucky if you get a raise like that. Okay, the average person is not keeping up with inflation or stagflation and taxes. And this is in spite of the Federal Reserve and other liars using phony economic data claiming there is no inflation and we have to have inflation. You want to hear reality? Here's a fact check. This is from a honest CEO of a large publicly traded company. This is from the CEO of Del Monte Foods. This is a Reuters article quoting him from his conference call. And I'll attach a link to this if you want to read it. Quote, it's not just tariffs. Transportation costs are up. Labor costs are up, end quote. Chief Executive Officer Greg Longstreet told Reuters at a conference in New York, quote, it's an inflationary environment. A lot of that's going to have to be passed on. The consumer is going to have to pay more for a lot of critical goods, end quote. Meanwhile, a lot of these other CEOs, for bad quarters, misallocations of capital, screw-ups at the company, they're blaming it on tariffs, they're blaming it on Trump. We've seen recently bad earnings from Nordstrom's. Nordstrom's, I believe, had the worst earnings report, I think, in the company history. They missed earnings per share by 20 cents and revenues were down $210 million off the estimates. And I don't know if Nordstrom's, if it's all because the consumer's not doing well, because a lot of it's online and Nordstrom's management sounds like they did drop the ball. But I think a lot of people who do go to malls still, and mall traffic at a lot of different malls is down, but the upper level malls, people are still going, and their parking lot indicators are high, but people are not buying as much stuff. And the numbers that we're seeing for online sales, that is up actually 9% in the last year. But let me pull up the data really quick. So non-store retailers were up 9% from April 2018, but there were stores that got hurt really bad retail sales. So sporting goods, hobby, musical instruments, and bookstores got killed almost 9%. So Amazon and other online stores took away all those retailers' business. So anecdotally, there is lots of evidence that the US consumer is getting killed. Their wages are not keeping up with stagflation and taxes. Whether that is the tons and tons of cars I see just driving around of people, all different ages, all different types of cars who cannot afford to fix their cars. Okay, I've seen like really bad car damage. Some of it's cosmetic and some of it's very expensive and people cannot afford to get it fixed. That's how bad things are. You'd think that if it was a very serious car accident or something else, that they would be able to, that they would make the sacrifices to get it fixed. On top of this, and people said they want to hear dating app stories. Well, here in this area, which is in these counties, which are supposedly better off than a lot of other areas in the United States, there's women 18 years old to 25 years old who are actively putting it on their profile that they want a sugar daddy to pay their rent and other bills and take them on vacation, and that they have prices and they're willing to trade sex for these things. Okay? And it's exploded, especially in like the 18 to 24-year-old women. It's just absolutely exploded. It's really sad, but the anecdotal evidence is that the real economy is not doing well, despite President Trump's claims that this is the greatest economy ever. So some people may be benefiting from the Trump tax cuts or investment being brought back to the U.S., or maybe they were lucky that some jobs actually increased wages. But my point is that it's not offsetting the taxes that are increasing at the state and local level, and those taxes are going up. So even if you were a beneficiary of the Trump tax cuts, depending upon which state and municipality you live, you're probably getting killed with taxes on a number of different things. And then on top of that, you have inflation, which the Federal Reserve says there is no inflation. And we just had a CEO talk about extensively inflation, and he was honest about, his transportation costs are up, oil and energy costs are up, his labor costs are up. And then he has the stuff to do with the tariffs, how he, I believe for Del Monte Foods, they have to import oranges from Asia. So that's costing them higher too. So just a lot of hopium, a lot of fiction versus the reality of the real economy. Okay, the reality of the real economy, let me read you some more headlines. Let me pull up some more headlines. Here we go. Okay, this was just released today from the New York Times. The Federal Reserve did a study. Many adults, 4 in 10, do not have $400 in savings for an emergency. This was just released today, this story. Okay, let me move to some more stories. This was either this week or last week, these articles. There's like 4 or 5 of them. So another survey that was done, I think, by Bankrate, half of Americans are just one paycheck away from financial disaster. Another story, over 1 in 4 Americans are skipping a summer vacation. I talked about that on a recent live stream. I think that's from last month. That was another survey. Another survey, 53% of Americans live paycheck to paycheck. Another survey and story, this is Zero Hedge, but I believe it was from somewhere else. 62% of millennials are living paycheck to paycheck, and they don't have, I think, $500 in savings. 61% of millennials don't have $500 in savings, according to another survey. And my friend went through the data more, and he said what's more disturbing than just the millennials that are living paycheck to paycheck, 62%, is that Generation X ages, the data also shows Generation X ages 39 to 54, only slightly less of a percentage than millennials are living paycheck to paycheck. So people quite a bit older, more experienced in the workforce, they've unfortunately probably been fired and have to change careers because the corporate life is tough. Even if you're doing a good job and you're productive at your job, the corporation could still look for a way to fire you. And this brings me to solutions. So the future we have is we're going to have the people at the Federal Reserve saying there's not enough inflation. Meanwhile, they have other research coming out that 4 in 10 Americans doesn't even have $400 in savings. So they want to increase inflation. They're talking about this is the greatest economy ever, but the labor participation rate is awful. People are not being counted who are not applying to jobs. I know lots of people here in this area, in the Washington, D.C. metro area, who are working 2 or 3 jobs to keep their head above water. That's like a full-time job and a couple side hustles. So the new normal, in order for you to survive or get ahead, is going to have to be for you to figure out ways to offset inflation and taxes. That means you're going to have a side hustle or be entrepreneurial. You might not have to do that for a full-time job, but you're going to have to work with family and friends, maybe people you meet online, and either pool resources or pool skills or have skills that complement one another and find a side business that can offset that extra standard of living you are losing from inflation and taxes. Otherwise, it's going to be really, really tough going forward to build any savings because the people are going to be screaming that this is the greatest economy ever, there is no inflation, and meanwhile, in reality, the reality is more Americans have credit card debt, more Americans don't have savings, especially the ones that did not benefit from all this asset price inflation, that the Fed claims the inflation did not exist. Jason asks if this other Jason, this is not a rhetorical question. This Jason Townsend asks, inflation, the direct cause of socialist uprising. Inflation and taxes. So the way they've set things up with the brainwashing from mainstream media, mainstream financial media, government schools, and universities, and Keynesian economics, and all this other stuff, is they don't teach people what real capitalism is. They don't teach people what the Federal Reserve is. Most people don't even know what the Federal Reserve is and what it does. And so when inflation increases and when taxes increase, guess what? Most people blame capitalism. Or they blame a certain type of politician, normally Republicans. Republicans tend to get voted out of office if the stock market isn't going up and the economy is not going up. The economic data is not doing well. So it's important to know about retail, to pay attention to the consumer, and also because consumption is so much a part of GDP. And yes, GDP is fake, but this gives us an indicator of how the real economy is actually doing. And while restaurant sales have rallied recently in the last month or two, I would not see that as a long-term trend that's going to continue. The positive parts of the retail numbers, the retail sales, were the restaurants. So I would not expect that to continue. Let me check to see if I mentioned all the stories that I wanted to mention. So I will attach links and articles to all these stories. I think they're important. So I'm trying to give you a gauge between what people in power, the economic and political elites, are claiming, what is reality, and then inflation, and perhaps a solution for you to protect yourself to survive and thrive what is coming. The stagflate in tax and lie. Because there's just enormous anecdotal evidence that all of this is coming to fruition. Glad you guys like the show so far. I'm trying to be efficient, not do it too long. I was not feeling well about an hour ago, but I've toughed it out. Yeah, the higher oil taxes make a big deal. The consumer is getting hurt bad. My gasoline costs have gone up substantially. I think about 40-50%. My gasoline bill in just the last 4 or 5 months has gone up. I remember being able to fill about half a tank of gasoline in my car for $13-14, and now it's back up to $20. Yeah, rent's up too. Well, think about this. Rent has to increase because this is the property tax scheme a lot of these governments are doing. So these politicians at the state and local level think that most of their government budget and pension fund problems can be solved by just increasing property taxes. Illinois politicians have talked about this at length. It is tone deaf and beyond dumb. If you keep increasing property taxes, people will leave. And this is the data we're seeing. I even saw a story on Zero Hedge in the last couple days talking about how people in Democrat states, the amount of people renting U-Hauls to leave the state has exploded in New York, New Jersey, Illinois, and it's going to Texas, and it's going to North Carolina, South Carolina, Georgia. So people they cannot handle the taxes going up. Because why? Most people did not get a wage increase. And you're going to have to hustle. You're going to have to be entrepreneurial. You're going to have to be creative to figure out how to offset that currency devaluation or inflation and taxes that are increasing. And they're going to lie about it. Okay, taxes are not counted. Taxes destroy people's standards of livings too. But capitalism is getting blamed for all this. But it's really just central banks, which are socialist, and currency devaluation, which is inflation, and taxes. And they don't even have to do much more than that. Eventually, it will do the trick. It is inevitable. Okay, so let me take a look at listener questions and comments. There's more in-depth stuff if you want to take a look at it about the retail sales numbers, consumer sentiment. But I think the main point I'm trying to make is that the consumer confidence, it does not jive with reality. Okay, so the mainstream financial media was touting it, oh, consumer confidence is up. That means that retail is going to have good numbers. Well, retail didn't exactly have good numbers. Nordstrom totally had a horrible number. And I looked more into the Nordstrom stuff because I was planning on talking about them more in the show, but it appears that management may have screwed things up. But I also think that Nordstrom tends to be in a lot of good malls and that people who are going to the malls are not buying. So I think that plays a part in it as well. Now, at the lower end of retail, I think Walmart and Target are doing pretty good, but Walmart mentioned that their costs on things are going up because of the tariffs. Or at least they're going to blame things on the tariffs. And it seems a lot of CEOs from this article, the only CEO to me who was really honest, who was actually candid, was the Del Monte Foods CEO. The rest of the CEOs in this Reuters article, quoting from at the conference, seem to want to blame Trump and the tariffs for all their problems. So you're going to be hearing, if you pay attention to conference calls and earnings reports, you're going to hear a lot of companies just blame Trump and the tariffs and the trade war. I think Nike and some of the other companies have already gotten ahead of this and are already, the phone's probably ringing from the Nike lobbyists off the hook now. They're probably calling 10 times a day to the White House and the Trump administration. Yeah, American Expat, I saw that. It's going on Twitter that China just had a bank bailout. There was a bank run. That was interesting. But the Chinese government owns 90% of the banks, so theoretically they can just print more RMB. It's the dollar-denominated debt that's going to get China really in trouble. It's their trade reserves that are dwindling a lot to protect their dollar peg at a certain ratio, fixed exchange ratio, and then it's the dollar-denominated debt that will ultimately get the Chinese state-owned enterprises and the Chinese corporations that are borrowed offshore in trouble. The luxury goods for a while have held up pretty good, but that's because a lot of the people that benefited in the last 10 years from this everything bubble and the asset price reflation and new asset bubbles have then bought luxury goods. So they've been cashing out profits. The people, most Americans don't have the money to buy a bunch of assets. Most Americans, especially my generation or younger adults, don't have the money now to go buy their own house, let alone buy their own car. So they have not benefited from the last 10 years or so of asset price inflation and the everything bubble. The people who have benefited from higher asset prices and have made enormous capital gains taxes because of central bank intervention, all these central banks doing QE and currency devaluation, some of those people have cashed out and they've been buying the luxury stuff. Yeah, the other thing I wanted to mention, Briggs brought this up, is the other real-world evidence that we're seeing that about the U.S. consumer, that consumer confidence should not be that high, thanks for bringing this up, is the automotive industry in the United States is already in recession. There's just enormous evidence, whether it's new car sales and used car sales. The auto industry in the United States is in an enormous recession. There's many millions of Americans who are very late on their car payments. Credit card debt has exploded. So all these things together show that most American consumers are not in a good shape, especially with the lack of savings. So then they're using debt to try to offset if they don't have the savings to pay. And on top of that, if you want to go global macro, China car sales are down a lot too. So Tesla's actually opening that China factory at the exact wrong time. It should have been done years ago, because China's car sales are down a lot. So unless the Chinese government actually makes a mandate that Chinese citizens have to buy electric vehicles, and even then it might not benefit Tesla that much, because a lot of Chinese car companies probably in 2 or 3 years are just going to copy everything Tesla makes. and there's no intellectual property there. So Tesla's not going to get any royalties or be able to sue them for any money. Yeah, I haven't looked at a lot of the luxury good companies, so I can't talk about them too much. I mostly looked at Nordstrom's and Walmart and Target, and Walmart and Target appeared to have had okay quarters recently, but Walmart's CEO just came out for Q2 with the tariffs, and he's already saying it's going to be bad. So it looks like that's going to be these CEOs now are always trying to lower expectations so they can just easily jump over the bar. And that's going to be the new excuse du jour, is going to be, it's President Trump's fault, it's the tariffs' fault, why we didn't meet our revenues and earnings targets for the quarter. And, that's part of the blame game. Even though the underlying business is probably not doing well before the tariffs, but that's going to be the new blame game, that they're going to blame it on that. Because a lot of these CEOs of publicly traded companies, they're always looking for new excuses and people to blame. And they're so short-term oriented compared to the past. I mean, and then on top of that, you have people demanding higher wages, and these businesses, a lot of businesses cannot afford higher wages. I saw Bernie Sanders tweet out, it was either today or yesterday, that why is McDonald's able to buy back their stock, and why don't they just pay their workers more money? Well, McDonald's is doing financial engineering, Bernie. He doesn't know jack about, balance sheets, about financial engineering. He doesn't know any of this stuff. And McDonald's is not using profits to buy back shares. McDonald's is using lots of debt to buy back shares. So the CEO and the upper management team can get rich quick. Meanwhile, 5, 10, 15 years from now, McDonald's is going to be General Electric if they don't fix things. Okay, McDonald's debt on their balance sheet has exploded. It's all financial engineering. So McDonald's revenue keeps going down for the most part, while their earnings per share goes up. And that's because they're reducing the share count. It's tricks, financial engineering. So Bernie Sanders should learn a thing or two. So the people who are demanding higher wages because there's inflation and taxes and are blaming capitalism, there's not all this free cash flow and profits to go around. I've already explained that most of the companies in the S&P 500 don't have enormous piles of cash. A lot of them aren't more profitable than they were years ago. A lot of them are actually not doing very well. It's only 10% or less of all the stock market indices that are actually dragging all the indices higher. The majority of companies, around 90% or more of every company in all the major stock market indices, whether it's the Russell 2000, the Russell 3000, are not making new 52-week highs. They are struggling, and their balance sheets are in trouble. They're loaded with debt. So this is just, it's a microcosm of everything. Just too much debt across the board, whether it's government debt, corporations, and the consumer. There is just too much debt, and there is a lot of fiction, and there is a lot of hopium and false narrative going around. Okay, well, that's it for this short video, this short show. If you have any other questions or comments, you can put them underneath the video after the show is over, and I will attach all these story links for people if you want to go more in depth about the consumer. But I would say the consumer is grossly overconfident, especially the ones whose jobs may be in jeopardy if things get worse. I mean, the auto industry is in the United States is looking like it's in trouble. Ford just fired, I think, laid off about 7,000 people. So that's a serious number. And unfortunately, I think it's going to get worse before it gets better, because a lot of these industries are getting in recession. We knew this about 8 months to a year ago. One of the leading economic indicators was this really good interview on Real Vision Television. There was a chemicals expert, and he was talking about all the industries that would head into recession in advance, and the auto industry and electronics and a couple other industries were named. So the claim that this is the greatest economy ever, I just don't see any evidence. But there are people that believe it, that believe the rhetoric, because some people, right, if you repeat something enough, they actually believe it, even if it's not true. But if it's repeated enough by either President Trump or the mainstream media or Fox News or whoever, or Fox Business, then enough people will believe it, even if it's not true. So even if their bills are going up, even if their wages are not increased, they're still going to think, well, it's the greatest economy ever. I'll find another job, or I'll get a pay raise, or something like that. And that seems to be the false narrative, the hopium with this consumer confidence index at 15-year highs. I just don't see the justification for it. Okay, guys, that's it for now. Everyone have a nice weekend. Bye.